Hello, everybody. How are we doing today? Last day of the conference. Hope everyone's having a good time. I come here today to talk about something that's probably on a lot of people's minds, but what's the next step when it comes to digital asset treasuries? We've seen a lot of money raised. A lot of money in Bitcoin, ETH, Solana, into public companies that effectively, the way that I look at it, they're ETF lights. You buy exposure to them because, what? They give you access to the underlying. But if you go back to the beginning, if you go back to the start, when companies first started doing this, the first company to do this was MicroStrategy. And what was their pitch? Their pitch had nothing to do with being an ETF, had nothing to do with giving you access to Bitcoin. Their pitch was, every company in America should own Bitcoin on its balance sheet to diversify and protect against inflation. That was the pitch. And I feel like we've lost sight of that original goal, which is to get Bitcoin in the hands of every company in America and abroad so that they're protected against inflation, or so that they get access to additional growth, so that they get a good valuation premium. All these things can be true. It's not just to offer a vehicle so that you can access Bitcoin or Solana or Ethereum on the secondary markets. It's not just for accumulating. So again, right now they focus on access. But there's an opportunity here. It's actually a big opportunity. One thing I like to think about is when Berkshire Hathaway first started, Warren Buffett starts buying companies. They hold all of their reserves in cash. What would have happened if they had stacked Bitcoin if Bitcoin existed back then? Or another way of thinking about it is, what if they just put their cash into the S&P, even 50% of their cash into the S&P? Their legendary performance might have been even more legendary over time, because that cash is a drag. And even now, right now, Berkshire Hathaway is getting a little bit hit because they're holding so many treasuries. They're not, and the dollar's going down. So I was thinking about this with a couple people that I really respect from the world of TradFi. And we came up with this idea of a permanent capital vehicle that acquires businesses, specifically American businesses, because that's our focus. And we go out there, we buy these businesses, and then we take the cash flow and we allocate it to Bitcoin over time. It's a backdoor to the original thesis of what MicroStrategy set out to do, which is get Bitcoin on every balance sheet of every American company. But of course, what am I talking about here? We're just going to go out there and we're going to buy companies and then buy Bitcoin with it? Why? Like what real value do I get, and why is now the right time to do it? Well, first, if you're interested in the private equity world at all, if you're looking at the smaller companies, you'll know that there are a lot of companies coming online right now, because there are a lot of companies owned by people in 50s to 60s. They're aging out and they're looking to sell. And these are good businesses with good cash flows, good backing. It's a huge, huge opportunity there. And this is happening at the same time that Bitcoin is really exploding. One of the major issues that I see with the digital asset treasuries today is that their access to capital comes mostly when Bitcoin is going up. So they can go out into the capital markets and they can raise money specifically when Bitcoin's high. So what naturally happens is that they end up plowing all of their capital in at the highs of Bitcoin, because Bitcoin tends to do that. Tends to run very hard, everyone gets very excited, then you raise a little bit of money, you buy the top, happened with a few of these DATs, and then comes crashing down, and guess what, you're not in a great space. So one thing that we set out to do is, how can we make sure that we have access to capital even when Bitcoin's down? And that's by being invested in companies that produce cash flow day over day, agricultural business, mining business, HVAC roll-up, any of these things that produce cash day to day that we can then roll into Bitcoin. So you get kind of a really interesting vehicle here where you have the upside valuation that comes with owning Bitcoin on your balance sheet, but you have the downside protection of real assets. A lot of DATs The reason that they trade at a premium is specifically because people are convinced that they can go buy more Bitcoin in the future. And that requires access to capital. Every single DAT that you see that's trading below NAV is because the market doesn't believe that they're going to be able to accumulate more Bitcoin over time. People say either the management's bad, it's not designed properly, that I don't believe that they're going to be able to raise money from the public markets because the right guy's not in charge. MicroStrategy does an amazing job at this because they keep offering financial products, and they've proven that they've managed to weather downturns. But I think that's sort of a interesting outlier, not the rule. So the question is, how do we make sure that we get a valuation premium, is that we have access to capital at any moment. So it starts with acquiring durable, high-margin businesses, putting our money into Bitcoin, using that cash flow to achieve a good valuation, and then using that good valuation to borrow money and then go buy more cash flowing businesses. It's an accretive flywheel for the private equity model and for Bitcoin. So that's sort of the idea, is right now you're seeing a lot of equity compression in the DAT space, and it's because of everything that I've outlined. We want to make sure that when things start to go wrong in the cryptocurrency markets, we're there to pick up the pieces. We want to make sure that we're not in a situation where we take out a ton of debt to go buy a ton of Bitcoin, and then we can't service that debt in 4 years, in 5 years. And that is actually a big issue right now in this market. So the way that I view this is we're going back to the beginning. But why invest now when the DAT market is flooded with opportunities? Performance is getting worse. Everyone seems to be coming in, and that's diluting the value of a lot of these companies. It's because we're specifically designed to pick up the pieces as they fall. We're specifically designed not to go out there and buy a ton of Bitcoin at the beginning, but to be structured in a way so that we have cash on hand so that when and if Bitcoin eventually does its classic 30-40% drawdown, you see these NAV multiples compress. Maybe things are trading at a 30 to 40% discount on the open market. We have the ability to go in there and actually buy up the shares of these companies and get access to their Bitcoin. So this is really, really, really important. It is making sure that you build a company that fulfills the original vision of what MicroStrategy was going for. And this, if it works, which I think it will, would be good for the entire industry. And the reason is because people love copying things that works. They love it because they see, okay, there's a leader, we can do the same thing, we can get the same multiple, we can build the same business, and then suddenly you might see every small business in America start to put Bitcoin on their balance sheet. You might see every small public company start to put Bitcoin on their balance sheet. And then you might see medium-sized companies and large companies do it. And that's really what we're going for. Setting up a company to improve upon the digital asset treasury model, to go back to the origin, to weather the inevitable storms, and to pick up the pieces when it falls. I thank you for your time.